Hey everyone, welcome to Name Confidential. I'm this week's host, Ryan Redfern. Today we have Whitney Ribbens, the CFP, the CMT with Chicago Wealth Management, also the Vice President of Name right now. Total badass. Whitney, great to see you. Great. Thanks for being here today.
Yeah, good to see you, Ryan. Thanks for having me.
Absolutely, absolutely. Well, I know the name exposure index is now behind a paywall, so we're not showing,
Hmm.
we haven't decided how we're going to show this visually, and I don't have the number. I don't have my own login to check it out yet, so I don't know what it is. But I can tell you that I reported 120 this week, so I don't know.
All right.
So I'm
We're a
in.
little lower. I'll give our report. We're sitting around 90 at the moment.
Okay.
It's been kind of interesting actually, just we run a relative strength,
Yeah.
sort of system. And so as we've been tracking some of this changing or oscillating sometimes leadership,
Yeah.
we've in a couple of our holdings, we've been a little bit more cautious in doing, partial weight or partial positions. So we're a little bit lower than you guys are for the moment,
90s.
but that can change anytime. So,
It could.
you know.
It could. 90 is a good number. I mean, you're participating. You're not missing
Yeah,
out, right?
absolutely. Absolutely.
So in that model, can you be is 100% your max, or does it go to with
Yeah,
leverage?
100% is our max. We don't
Okay.
we don't typically lever up or anything like that. So yeah,
Okay.
it can go 0 to 100 in
Right.
equities. So yeah, it
Got
usually
it.
skews higher. It positions don't typically go risk off or go to cash unless they're a pretty
Right.
extreme market stress
Yeah.
environment going on.
Yeah.
So it's usually on the higher end for us. But
No, no,
yes.
that's fair. That's fair. Because mine at 120 is actually would be considered like half of that, 60% invested, because I can be
Okay,
200 or negative 80, I
got
think
it.
is the range. So, but I
Yeah,
think it's a great example of how so many people that contribute to this index have different ways that they go about it and different
yeah,
reasons, different time frames, and it's very
absolutely.
different. Yeah.
Absolutely.
Yeah.
For sure.
And it is
Yeah.
funny that I am also in leverage, but some of my holdings are like these hedged inverse,
Okay.
not inverse,
Yeah.
but long short funds. Like
Right.
they're not acting. I'm not like 220% in. So
Yes. Yeah. Got it.
it
Yeah.
can be across the board. So yeah,
Right.
we're all
To your
local.
point, even the difference in, potential universe that the various,
Yeah,
managers um have at their
right,
disposal or that they typically use. Yeah.
right,
It's always fascinating to me, for sure.
right. Yeah, and I remember back in I think it was 2022, I was completely market neutral. So I was saying I was zero,
Mm,
but I was invested. I was just like
right.
long one thing and short the other to offset it.
Yeah.
So you
Yeah.
know, there's a lot of
I mean,
nuance
that's
that
a great point. I love the exposure index. I being a data person, being an econ type minded person just by nature, I inevitably have many questions. And so one of those questions tends to be, okay, you give your number, but that what you're invested in might be totally and completely different than, you know what I mean? So is it in, it could be the S&P 500, I suppose, or it
right,
could be something wildly different.
right,
Yeah,
right.
there's always
100% hedged equity, basically. I mean, yeah,
yeah,
it's different,
right, exactly. It's different. That's
completely
different.
different. Well, nice,
Yeah.
nice. Well, as now that you are the new vice president of Name, any
Yeah.
visions for the future of where Name needs to go, or where you see it going?
Yeah. I listened to your conversation with Ron Ruff, our current
Yep.
president, a little bit ago, and I echo some of his recent comments. There's been really good work from recent leadership, especially that, I know we would really love to continue. I would love to see Name really expand its presence to be known as the community for investment advisors engaged in active management for their clients, like in any capacity, really. Just community seems to be kind of the buzzword for the decade, maybe, but
Yeah.
honestly, I mean, even us nerdy traders are ultimately looking for collaboration and community. Um, I know that was one of the main attractions for our firm to name. We went to one of the conferences and realized, like, oh, like these are our people. These are
Mhm.
like-minded people, often trying to solve similar problems. So yeah, I mean, regardless of like the size of anyone's firm, I think the name community is absolutely worth investing in to develop professional relationships in ways that expand your perspective and beyond your own firm or your own little bubble, so to speak. Yeah, so I would love to see NAAIM get its name out there even more, right? To attract
Right.
just more of those folks and build a bigger, like more robust community. Because I mean, we've had just a great experience there. So yeah,
No, I completely agree. It's been a great thing for me as well. I mean,
yeah,
went from a solo single person to a larger firm myself.
right.
But I would never have grown that way had it not been for this group of people.
Yeah,
Having people that say, "Oh, I'm stuck in this area," or
right.
it gets lonely out there trading on your own. I swear, having people to
It
talk to is
does.
amazing.
Or even just getting caught in, not caught necessarily, but getting into your own patterns of thinking. And sometimes it can be really useful to hear, outside, just different things that people are doing. I, I don't go to every single meeting and come out with, an earth-shattering idea
Right.
that's changing my life and changing the lives of all of our clients. Like that's not happening at every meeting, but building those relationships, just getting even other people to problem solve with. I find to be really useful. So yeah,
No,
that's
absolutely, absolutely. And I've gotten great stuff from you, so I mean, appreciate it.
thanks, Ryan. Likewise.
I really have, really have. You did a great presentation. I think I remember it was last year at
Okay.
Common Knowledge. When
Yeah.
we just talking about strategy and how you guys come at it.
Mm.
There were some really interesting things I took away and I still use today. So
Yeah. Awesome.
appreciate them. Yeah.
Great. Oh,
See,
that makes me feel happy.
you didn't even know. How
I
about you do
didn't
a great
even
job?
know.
Absolutely, absolutely. Well, let's do a little bit, real quick overview about you. How
Sure.
did you get to where you are here
Yeah.
in Chicago Wealth Management, both a CFP and a CMT, which is like
Yes.
everything.
Yes. So yeah, so back in the day, I was an economics major,
Yeah.
big econ nerd. I love efficiency in all areas of life. Efficiency is a wonderful thing to strive for.
Right.
But so I joined Chicago Wealth Management, my current firm, back in 2010,
Okay.
uh, in more of a support role. And so our firm is very planning based in how we engage with clients. So after a couple of years, yeah, I decided to pursue the CFP designation. So that was fun. And but the other guiding principle for our firm has always been the investment piece, right? Like there has to be a better way to do the investments than just a static allocation portfolio. So that had always been something like a longstanding principle or like endeavor, I suppose, of the firm and the firm's founders. So yeah, so I got very involved then over the years with the investment research side of things at CWM and helped develop our current approach. So yeah, and yeah, during that time I earned the CMT, the Chartered Market Technician designation. I think that was back in 2018 now. But yeah, that's kind of broad strokes, my background. But it was a bit of a winding path, I'll say,
Right. Right.
to where I am in this moment. So
Right. Right.
yeah,
Nice. Nice. Well, they're very cool, very cool. So let's do a little bit on your investment philosophy, if you don't mind, because I know it, like you said,
yeah.
not to be the traditional dot buy and hold, but that doesn't mean you're a crazy tactical trading advisor. And I don't believe you get that's the path that you guys are on.
No, no, we really aren't. So we've built our strategy around the principles of relative strength. So in terms of broad-based goals, we want to be investing in areas of the market that are demonstrating strength relative to other areas of the market. Um, we want to be managing risk, specifically the max drawdowns. To anybody who's watching this is probably old hat, like, yeah, 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 of course. But but max drawdowns important so that portfolios are psychologically palatable to clients. I mean, that actually is impactful. And that so that you can better support withdrawals, especially coming out of portfolios.
Absolutely.
And then I would say the last thing that's in terms of broad goals is we want our strategies to be portfolio level. So we want, something you can apply to a client's total investment portfolio, which that was one of the pieces of the puzzle that was particularly tricky for us, at least over the years. But yeah, so those are kind of the major goals of our process, I would say.
Right. Got it. And when we were kind of prepping for this, you talked about, and I feel like I'm going a slightly different way than we discussed, but you were talking
No, that's
about
fine.
how does an active manager take models and create a portfolio out of that? How do you guys think about that?
Yeah. So yes, as we kind of talked before, as you said, that's always a question mark in my mind, a curiosity point over, the hundreds or however many meetings I've ever been to, investment related. Um, and you hear, you can see all kinds of strategies and cool signals and other things that people do. And I'm always curious to know how people combine those or use those in a portfolio. So because of the system that we use, we have like a total universe, and we had talked about this more the last time that you and I did this. That was a while back now, but kind
I know.
of went into more specific detail about how we do that. But so we use mostly broad-based ETFs, but they go everywhere from broad-based asset out, broad-based sectors all the way down to subsectors. In our strategy. So, but we combine the whole thing, and it's sort of a matrix comparison system that we're looking at. And we use NASDAQ Dorsey Wright as like a
Mhm.
behind the scenes software to do all
Sure.
all of those calculations and things for us. But so we do it with our whole universe that then ends up, it's a ranking system, ranking all the things in our universe. So, but the reason we do that is because we considered other avenues. For instance, you have a more traditional, let's say, institutional style box kind of system where you have a range in US stocks or a range in
Right.
international, et cetera. But from our perspective, it's like, well, if you're going through a type of market environment where maybe I don't want any international stocks, what
Mhm.
do I do about that? Like, why would I want to box myself in to a certain percentage of my portfolio in something that's just persistently underperforming? Why would I mean, and massively underperforming?
Mhm.
I don't want to do that. Let's not do that. So,
Right. Right.
um, that's that's been our solution so far, is to do a total
Mhm.
comparison system like that. But I'm always curious to know how other active managers piece that
Right.
together.
That's interesting
Yeah.
because I think we come from that as well. For example, like we didn't have a lot small cap for the longest time. We still
Yeah.
really don't have much small cap
Yeah.
because there's been no reason to it. And
Yeah.
I find it's funny you get like the small cap salespeople going, oh, so what's your small cap bucket? I'm like, none because it
None.
sucks.
Yeah.
So
No.
none. That's easier, and that's how we come at it too. It's
Yeah.
instead of the multiple strategies. I know some people do that as well. Like my little sleeve is like 10% is tactical risk on, risk off
Right.
NASDAQ.
Or like a
And then
core plus satellite sort of system. Yeah.
right. And there are so many different ways. And I almost
Yeah.
think that we should do a webinar with name of several of us, probably you and I, and maybe find a couple others and
Yeah, that'd be great.
do like, here's how I come at it. Here's how Whitney comes at it.
Right.
And some
Yeah.
other, we could find a couple
That'd be
people who are
fascinating. I
way
I would
more
love that.
crazy. Right, but
Yeah.
I think we all come at it a little bit differently, so it's neat to combine.
Yeah. No,
So
I
yeah, I
agree.
think we talked about that. That might have to be a webinar in the future, just
Yeah.
like, to display active asset management as more than just the market timing, because I think there's too much of a bias, or people have that impression about what we do.
I completely agree. And it can be more than, we might have day traders,
Mhm. Yeah,
in as part of this, but we're not all day traders either. So yeah, as you said, it's not all just the market timing aspect. There are different avenues to come at it with. So yeah, that'd be great.
yeah, no, for sure. We will keep that in mind because I
Cool.
like how you come at things, and I've certainly adapted things that you do, and I
Yeah.
try to adapt a lot of things from this name community that have been
Yeah,
great.
for sure.
So yeah, it's interesting. So another fun topic that I think is great for you is being a woman in finance.
Yeah.
Um,
Hmm.
so so d- let's start with like what's your impression of that? I mean, it's such a, especially in the active trading world, it's male dominated, whereas the marketing side is all female. Laura and I
Yeah.
talked about this a couple weeks ago when she was on this, and we talked about
Right.
how at marketing conferences it's women,
Yeah.
at trading conferences it's guys. But that's
Yes.
changing. It is changing a little
Yeah.
bit. So
A little
what's your
bit.
impression and interpretation?
Yeah, it's interesting. Since I've experienced both the planning world and the investment world, at least to an
Mhm.
extent, I, to your point, you can see differences even in those two facets, like of the financial industry. And as you said, with in your conversation with Laura,
Yeah.
that there are lots of women at the marketing conferences. I would say something similar about the financial planning meetings, is that there are tons of women there.
Mhm.
There are tons of women there. So, but again, as you said, like not so many at many of the investment focused meetings. Um, I looked it up. According to Morningstar, at the end of 2024,
Okay.
only about 11% of portfolio managers in the US were women. That was kind of interesting to me. But yeah, so I mean, why aren't there more women on the investment side? Because some people I talk with that are not in the industry, right? Like think or assume that the main reason for that discrepancy is lingering misogyny or prejudice against
Right.
women, or like like a Wolf of Wall Street sort of like boys club kind of mentality or something like that. um and there, I mean, there may be some of that culture still in places, or like maybe more indirect or like subtle discrimination that's still out there. I don't know, but I actually think it's more complex than that in terms
Mhm.
of why we don't see more women. My sense overall is that there are two big issues in play:
Okay.
uh, confidence and attraction. So you can let me know what you think about this. My
Love
theories. I
it.
I would say that I from my observation, like men generally speaking have an easier time being, or at least exuding, confidence in the face of imperfect information.
Oh, that's
But
fair.
I don't know. What do you think about that?
I think you're that's a very good point.
Okay. So, and I think that lends itself to self-confidence in the investment management world. So, right, I mean, trading and investing means living in the world of uncertainty and imperfect information. And
Mhm.
you really have to find a way to be confident in the face of all that uncertainty, which can be tough. I mean, for anybody. But so women, on the other hand, tend to be, and I think you could argue, or sometimes even more often coached to be, more humble and collaborative, like
Mhm.
just as a general way of operating,
Yeah,
which isn't bad. I mean, that can be really useful, especially in like interpersonal relationships, right?
sure.
Um, and I think it's also one of the reasons that we've seen an influx like of women in the financial planning space in recent years. That like collaborative nature,
Yeah.
working together, understanding psychological issues and motivations, and then working together with the client to solve problems given those realities. It's um it's a more obviously collaborative process, I think. But that humility piece, I think, can be a real double-edged sword. I think that humility, if not kept in check, can be a barrier to self-confidence. But it can also be a big benefit to wise investing. So I don't know what you think of that.
That was
That
fantastic.
first piece of my theory.
No, no,
But
I think there's a lot to go into there. I mean, we tell new advisors that want to come on that most of the job in an hour meeting is 5 minutes of their account and
yeah,
55 minutes of family and what they're dealing with and
right.
planning and collaborating, right? That is more the job than people realize,
Yeah.
right? The numbers and the stocks and the trading and the data, it's not a math job, not as much as people think. And I
Mm-hmm.
think that's a barrier as well. I mean, but you've somehow overcome it, and you do an amazing job from what I've seen.
Thanks. I mean, I do my best. So what I
Don't we
also think
all?
is interesting is that, for the trading investment side of things, right? CMT
Yep.
related technical analysis types of things that we've gotten into. If you are winning 70% of your trades, you are killing it,
Hmm.
typically. I
Yeah.
mean, that's a 30% fail rate. For
Right.
perfectionists like me, that sucks. Like,
Yep.
that sucks. I don't want to
Yep.
fail 30% of the time. That's not in my like way of operating.
Yeah.
So, but so you just have to, it's a reality check. That's where the humility piece comes in. But yeah. So um, yeah, but maybe let's come back to that in a little bit, because I actually think that the second thing I mentioned, the
Okay.
attraction piece,
Yes.
is maybe the bigger issue. to what we're talking about. I think that just not as many women are drawn to investment management.
Oh
So I
no.
was thinking about like why is that, right?
Yeah.
Um, and if you look at female dominated industries, they tend to be helper industries,
Mhm.
right? Healthcare, education, social services, like those are all fairly female dominated
Yep.
jobs. Um, so to what extent are women not drawn to investment management? Be like not because they're intimidated by the job um, or maybe the culture,
Mhm.
but actually because they don't see it as a helping or relational job. So like they don't really see it as helping people. They see it as more like cutthroat or soulless even.
Yeah. Yeah.
So, and I'll give you a personal anecdote, which you may have
Ooh.
heard before. I'll use my younger self as an example of this. When I was a senior in college, again, big econ nerd, my father asked me if I would be interested in wealth management, and I very rudely said, "No, I don't want to spend my life making rich people richer." And but I think that's how a lot of people see this job.
Right.
So, you know, I to what extent do people and women specifically think that passive investing is good enough for
Mhm.
most non-billionaire normie
Right.
types of folks, right? Like who really cares about trying to earn like a little extra with complex active management strategies?
Sure.
Like passive is good enough. Um, but you and I know as active managers ourselves, like it can make actually a big difference in
Mhm.
people's lives.
Oh yeah.
Um,
Huge.
right? Like many of our clients, they rely on us to be good stewards of their
Mhm.
investments in order to sustain their retirements, their lifestyles, like their legacy and charitable goals. And
Right.
those things are really tied to their own sense of meaning and fulfillment. So, building adaptive investment strategies that can sustain withdrawals from portfolios over long periods of time. It's actually a big, impactful job that's also not necessarily as simple as plunking some money into a target date or S&P
Yeah.
500 fund. So there you go. That's my two-pronged large theory about
It's a
about why
fantastic theory.
we're not seeing a whole lot of women so far.
No, I get it. I completely agree, and I think there is a lot of beliefs around it that are maybe outdated in a lot of ways because I don't
Mm,
find that as much anymore. My firm is very women centric.
yeah,
They,
yeah,
they run the show, and that's how it is, and I'm totally cool with it.
right.
And I
Yeah,
find more and more of that out there. Certainly,
yeah,
as the younger people are finding this as a job and making it. I think it's
yeah,
people we that's mostly objected to. They're retiring. They're
mm,
they're phasing themselves out. So I think the
yeah,
face of this job and industry is really going to change over the next, I would say, 10, 20 years. I think it's going to
yeah,
be very different than what it
yeah,
was. But yeah,
right.
we still have to get over the stigma of what it was for 100, 200 years.
Right.
I get
Yeah.
that.
Yeah. I was thinking about it like in comparison to like the medical field, right?
Mhm.
So um very very rigorous process to become a physician, very math and science based, right?
Yeah.
And I looked this one up too. According to
Like
the
it.
Google, in 1975, about 9% of all physicians in the US were women. Although I think at that point they were up to about 20% of new med school students were women, but in any case, only 9% of all physicians. And then as of the beginning of 2025, about 38% of all physicians were women. And that number at that point was much higher for younger doctors. It was, I think 60% of all physicians age 35 and under. So, I mean, in that sense, clearly you can see women can and do push through the demographic barriers and the
Yep.
math science barriers that so many people have talked about.
Yeah.
But if they're motivated to do it. So, and medicine strikes me as that kind of field, right? Like people find meaning in being physicians. It's worth the perseverance and the work to be able to help people, to heal people.
Mhm.
So yeah, I think you're right. I mean, I think if we want more women in the field, we need to change that perspective on
Mhm.
how much meaning there can actually be
For
in
sure.
this profession.
Yeah. Yeah.
Yeah.
I find the medical one also is that's, certainly I grew up hearing is like that's where you want to make money, you go into that
Yeah.
that field. I've met a lot of women who've gone into nursing for the money. I mean, that's why
Sure.
they're going
Yeah.
at it. And I'm like,
Yeah.
what we do is way easier for similar.
You don't necessarily have to get locked into a 12-hour shift
Exactly,
3 times a
exactly.
week. Yeah.
Unless you're in the futures and then you're 24 hours, and that's a whole different
Right.
that's a
Yeah.
different
Yeah.
problem.
But that's self-selection.
It is, it
Yeah.
is. It's a niche
That's a
within a
choose your own
niche.
adventure sort of path.
Right, right, exactly, exactly. So it's interesting. I hope there are more into what we do in the future. I think it's such a great place, and it
Yeah.
really does help people
Yeah.
more than you think. I mean, how many people who would not have been millionaires are because of you?
I don't know. That would be a great thing to count. I would love to give myself that sort of credit.
No, exactly. This is something that we were thinking about, a couple of weeks ago, going,
Yeah.
realizing that, and you were saying, well, you make rich people richer. I mean, you can. That's not really
Right.
our niche. We're
Yes.
we're more like that. We work with a lot of teachers, a lot of,
Yeah.
blue collar, and we've made a lot of people millionaires that probably would not have been on their own.
Right.
From not
But
just from the
yeah,
investment, from the coaching, from the being
I
there.
that's exactly right. I was just going to add that as well, right? It's the double-edged sword. We talk about it here as because to your earlier point, a lot of the client facing things, like what the client feels is that relationship with the advisor and the good advice that they're getting, which is massively important. We view the investments as kind of like the fuel to the car. Like you
Yeah,
can buy a big fancy machine that has all the bells and whistles, and you can have a really detailed, excellent map of where you're going. And if you don't have fuel in your car, you're not going anywhere. Like you're not going to get there.
right.
So like, but it's under the hood. You don't think about it unless there's a problem with it. So, or unless you need to like refuel. So yeah, right. It's both,
Mhm.
between the good advice and the coaching and that being, a sounding board for people in
Yeah,
those the
yeah.
decision making process, and also the under the hood investment part of
Oh,
it.
absolutely,
So
absolutely.
yeah.
Well, it also makes me think of the Dave Ramsey, was it the last baby step, right? Is the be
Mm,
generous. You
yeah.
can't be generous if you don't have anything to be generous with. So,
Yes. Absolutely.
but
Absolutely. Yeah.
yeah. So I find that's an interesting thing to watch people cycle through, right? It's like,
Mm,
well, somebody else should give it. Being generous and you can you can do more good for the communities and whatever you are into if you have the money
right.
to support it.
Yes.
I wish
Yeah.
more people thought that way because that's where you see the most impact and change happen.
Oh, I agree. I agree. Absolutely.
People have to stop being afraid of being wealthy, or at least moderately wealthy, right?
Yes. Are they afraid of being moderately wealthy?
Some are, some are. I mean, have you ever had somebody who like self sabotages? They're like things are going well, and then they just gotta do something to derail that.
Yeah. Yes. Unfortunately, we see more of that than we would like. Well, you don't want to see
Same.
any of that, but yeah.
No, you don't. But I think that's interesting. Limiting beliefs is a whole nother thing we could talk about. We're not going to go into there because we're just
Yes.
about out
Yes.
of
A topic for
time.
another day.
Exactly. Well, awesome, awesome. All right. Well, thanks for doing all those things. Oh, do you have a favorite investment quote to wrap this up?
Oh, yes. Okay. I'm going to stick with the one that I shared last time. Mike Tyson. Everyone has a plan until they get punched in the face.
I love that that's yours.
Or punched in the mouth. I think it's actually
Punch in
punched
the
in the
mouth.
mouth.
Yeah, yeah.
Either way.
Yep. Yep. That is so fantastic. And I do
That's my
love that
favorite one.
quote. That's a really good one. And that is yours is even better. And then how does somebody get in contact with you if they want to find you?
Oh, yeah. Did I send you a slide on that? I forget.
Oh, that's all right. Just tell us.
No, no worries. It just our website is great. I mean, www.chicagowm.com, and all our info's on there. So
ChicagoWM.com. Wealth management.
yes, I'm sort of a social media recluse. So if you find
Okay.
me
So
on there, good luck to you.
that's fair. Totally fair. And then finally, our NAAIM Outlook conference is coming up October 26th and 27th in Dallas, Texas. Are you going to be there?
Yes, absolutely.
Absolutely. As will I.
Absolutely.
And so if you want to
Great.
continue this conversation, anybody watching with either of us, what's the
Yeah.
place to do it, right?
All right.
All right. All right.
Thanks, Ryan.
Well, thanks, Whitney. Good to see you again.
Yeah,
We'll
you
see you
too.
in Dallas. And thanks,
All
everybody, for
right.
watching. We'll see you next